Rebecca, obviously part of the story here is government action. Governments have, the federal government in particular, has been there to backstop many households that without them being there in terms of the funding that the government has provided would have been underwater a lot sooner into this pandemic. Are there things that you're looking at in terms of what government is doing and how they're responding to encourage them to do some things, or are there things that they shouldn't be doing, in your opinion?
So, I mean, first of all, I think those support mechanisms have been really critical in helping consumers through this period. And it's not for me to advise as to what necessarily is a good or bad way of doing it. But what we certainly have seen from a credit standpoint is that it has helped in terms of when you look at consumers' ability to repay their debts. Now, again, combined with some of those industry accommodations, the payment deferrals, it definitely has had an impact. Delinquency levels are down compared to where they were 6-7 months ago, which is unheard of really in a situation where effectively normally you would see some kind of recession coming through. You would see those delinquency levels start to increase, and we're just not seeing that yet. We're only seeing a very slight movement right now in terms of early delinquency. So they certainly have been pivotal. I think the key thing here is it's really around balance. So as you start to reduce some of those support mechanisms, if that's balanced with what's going on from the wider economy, so in terms of employment levels, in terms of how businesses are coping, if that support is balanced and as it reduces, we are recovering at a similar rate, then that should in theory mean that things are kind of okay and there is no negative impact. If those things become unbalanced, that's where I would expect to see some larger impact at the consumer level in terms of their ability to kind of repay some of their debts, and indeed at the business level. So at Equifax, we do work with commercial businesses as well. So both of those kind of areas, it's really important for both of them.
Well, I mean, there's been a lot of talk with the second lockdown on the commercial side right now, retail in particular, but other commercial activity as well. Are you worried about how they are weathering the second lockdown?
Absolutely. I mean, if you take something like the restaurant industry or hospitality industry and you look at the employment levels in Canada, there's over 1 million people employed in those kind of industries. And you look at kind of how they have weathered the storm so far, and we all know we're coming into the Canadian winter. It's very difficult when you have restaurants locked down and you have the inability to kind of have patrons through the door and eating in your favourite restaurant and bar. That makes it very difficult for those industries, and they tend to have smaller margins. So we definitely are concerned from the standpoint of, can they still get the level of support they need to keep those businesses going? Because longer term, there is a lot of employment linked to those kind of organisations. And if those job losses start to emerge from there, that's obviously going to have a knock-on impact on at the consumer level as well as all those people who are employed by them. So we certainly are I guess, monitoring it quite closely. It is a concern. I think so far as a country, we've actually done very well through this. But obviously, with the current lockdowns, that's going to be really challenging for a lot of those businesses.
Yeah, I guess my next question then is, what is the canary in the coal mine? You mentioned delinquencies in credit card payments for consumers. Is there anything that you're really watching closely on the business side, commercial, retail, what have you, that could augur a worse situation in the near future?
So we are certainly looking at employment levels. We're certainly looking at business closures, and we're really looking at this geographically as well. So whereas historically we tend to focus an awful lot on what's going on at an individual consumer level, right now those consumers have been heavily impacted by the area, the region they live in. So if you have certain regions that are high tourism, for example, they are likely to be more impacted through this than those which aren't. So we're kind of looking at all of those things in combination in terms of when we're kind of monitoring what's going on. Like I say, right now, we're not seeing anything too severe coming through on the business side. But again, when you kind of speak to some of those businesses, a lot of them are really hanging on.